The Bank of Canada just cut interest rates by 25 basis points on March 12th, bringing the overnight rate down to 2.75%. This is the first time the overnight rate has been below 3% since September of 2022 and marks the 7th consecutive interest rate cut by the Bank of Canada. Along with inflation seemingly being under control, spending and investment on the consumer and business side has slowed due to economic uncertainty around tariffs and trade wars. This is putting pressure on the economy, forcing the Bank of Canada to continue to cut interest rates. As I've touched on previously, we're seeing this on the housing side as well, as sales volume has slowed, as buyers and sellers put their plans on hold to see how these things play out. Will lower interest rates boost the market? In theory, yes, it should. It means more purchasing power for first-time buyers. The problem with our local markets is we're still seeing a suppressed amount of inventory, so there's not an immediate boost in activity. Also, the uncertainty around trade wars and tariffs can outweigh the pros of having a lower interest rate and higher purchasing power because people are uncertain of what the market's going to do. Also, most buyers and sellers are moving right now for life events. They're moving because they need to upsize because their family's growing, they need to downsize because their family's shrinking, or maybe they're ready to buy that first house and take their big step. The big missing piece in today's market, investors. A big reason why the market was so competitive and so aggressive during the ultra low interest rate pandemic environment was investors. People were seeing big gains in short amount of time investing in real estate, which made more people flock to it. Now, a lot of the negative media that we're seeing right now is investor segment, especially in the Toronto and Vancouver condo markets where investors are facing big losses. Now, people were investing in real estate here, whether it was people coming from the GTA and investing here or local people, which also drew activity and competitiveness in our market. These investors are not as much in the market now as they were 2, 3, 4 years ago, and that's because interest rates. As interest rates go down, you may see investors come back into the market, but they're not going to be investing for the same reasons that they were before. Investors were in the market, a lot of novice investors before, for sharp appreciation and to make a quick buck. Now investors are going back to the fundamentals of investing for cash flow, which is a lot harder to find than banking on some appreciation because the market is going up. That's it for this week's real estate update. Thank you guys for watching and see you next week.